Hi there, a very good morning, good afternoon to all of you, depending on wherever you're hearing me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to a very interesting sector. So, we'll discuss about that. Let's get started. First of all, disclaimer: this is not a stock recommendation. People taking any position or any share that I talk about should there with their own due diligence and research, and do consult your financial advisor before taking decisions on any calls that I take. Now, before I talk about the sector and a particular stock from that, here's a small request: kindly support me on Patreon, and thanks a lot for all the Patreon members who are part of Patreon, WhatsApp, and on YouTube. And kindly do keep supporting me. So once you get that membership, you'll have access to my portfolio, my watch list, a number of podcasts that I keep putting in on global and local economies, on different asset classes, long term stocks that are looking at very reasonable levels from a long term point of view. Plus, a watch list from time to time, you get it. So, all that is there, and whatever queries you are having, I answer that. So, do check the link in the description. Now, let's just discuss about the markets first, and then we are going to discuss about other things. Uh, so, if you come to the Nifty, so this is how the Nifty is behaving today, 26,000, around about 26,000. I still believe that the market is expensive. I'm reiterating the fact that if we take 1180 rupees as the earnings, then at around 26,000, if I round it off, then we are looking at a situation where the market is trading at 22 times current earnings with a growth rate factor of around 6.2% or something like that. So uh, that's pretty, I mean, at 3.5 times. The growth rate factor is 3.5 times compared to the S&P, which is at around 6,800 currently, with an S&P uh, EPS of 235, and it is trading at so if you look at S&P 500 based on its earnings for 2025, it's trading at 27.57, whereas the growth rate there is around 14% or so. So it's trading at 1.96. The Indian markets are trading at 3.5 times. Said that time and again that it is expensive, and we could see a 10% decline here. In terms of Bitcoin, it got another sell off yesterday, and now it is recovering a bit. I feel that this could continue for a week or so, but if we don't break 80,300, that was the level that we touched around here, 80,500. If we don't break that for a week or so, I think once we cross these levels of the 20-day moving average of 91,700 convincingly, I think above 92,000, it should get some traction, and I won't be surprised if it ends the year above $100,000. So that's about the Bitcoin. And in terms of the small cap index, if we look at it, the small cap index is not performing that well, and it has not been performing well since I would say July. Since July, things have become extremely difficult in the market, and from July onwards, stocks have catapulted down. So we got a sell off till March, April. From April till July, there was a run up and another round of sell off. And this time around, this could accentuate in the next 2 3 months. I believe the markets would bottom out by February, March. That's my understanding. So I feel that there could be another round of selling next year in a couple of months when US also corrects, because US is trading slightly stretched. It's not that it's trading at very good valuation. So there could be a 10, 12, 13% correction in the US, which would prompt another round of sell off in the mid and small cap. So beware of that while you're trading or investing at these levels. I think you'll get better levels probably in February, March. So that's about the markets. What I want to discuss with you today is the reality index. So if you look at the Nifty reality index, it is trading at very interesting levels. So basically, what has happened is I have looked at which are the sectors that have not performed at this year. Now, real estate has not performed at all for the last nearly 23 months. So if you look here, in this was around January of 2024. It was around 885, 890 was the level in January of 2024, 894. And today also it is trading at around 893. That is the index level for Nifty Reality. So over the last uh, 22 months, more than 22 months, it's right there. There has been no return whatsoever. And there have been stocks that have gone down 20, 30, 40%. So I believe that after such a long consolidation with rates coming down and things getting stabilized with respect to RERA, etc., and many other things, yes, there is oversupply of some of the projects, but eventually this should end up being a situation where the valuation would become much better since the numbers have increased, since growth is there in most of the sectors. So growth is there in real estate as well, and yet the markets have not performed that well. So if I look at uh, on the candlestick chart as well on a monthly 2 year basis, if you see here, the index is trading at very you can say it's not at all stretched. 50, the RSI is 50. It has gone virtually nowhere. If you look at it here, in January it was around 894. Today it is around 890, 895. I believe that there could be an opportunity in here in some of the companies from a 2 year, 3 year perspective, where companies could grow much faster than the overall growth rate of the market. One of them, in my opinion, could be Phoenix Mills. Now, Phoenix Mills is the only company in the list of the real estate index which have been positive over the last 1 year. Otherwise, other companies have been either flat to negative now in terms of performance. Now, Phoenix Mills is a 61,000 crore market cap company. It is engaged in the operations and management of malls, construction of commercial and residential properties, and hotel, etc. That's their business verticals. If you look at it, trading at around 57 times on the PE basis. So let's see how the valuations stack up. So if you, in terms of PE, it is trading at around 57. This is the, you can say, a 5 year average that Phoenix Mills have traded at, just above the 10-year average of around 50. It's trading at around 57 times. And if you look at from market cap to sales perspective as well, the stock is trading at around, so it is slightly stretched at around 15, 16 times, although average has been 9 times. And if I look at from a 5 year average point of view, it's around 13, 13 and a half, so slightly stretched here, but overall performance have been pretty good. So if you look at the numbers in the September quarter, they did 1100, just over 1100 crores of sales, whereas in the last year in the same quarter they did 900 crores. So they had a growth of around 23, 24% in sales. In terms of operating profit, from 518 crores to jump to 667. So if I take that, it's around 28, 29%. Again, consistently growth is coming in a little bit down or up. And look at the margins. The margins have been pretty strong. So if you look at the margins, it's around 50 to 60% for Phoenix Mills over that period. And EPS has also grown. So overall, the company is producing very strong numbers. If I look at it from 2021, 1,000 crores from 21 is going to set to become in FY25. It became around 3,800 crores, so that's more than 3x jump, and it's set to grow even further. So overall, the company looking pretty strong. In terms of balance sheet as well, you have reserves of around 10,700 crores with borrowings of around 5,000 crores. So even though it is a real estate company, it is in the infrastructure domain, there's a lot of reserves that are with the company, and that is probably why the stock is trading at 50, 60 times. So something to really look at, analyze, is a company which is Phoenix Mills. So this is a video on this real estate firm as well as the markets. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly do support me on Patreon. Thanks a lot for watching.